Hi guys, welcome again to another informative um, tutorial on the MetaTrader 4 as well as on trading in general. Well, today specifically I'd like to discuss the topic of the weekend gap with you. Okay, and the market just opened about an hour 30 minutes ago, so it is a perfectly great time to look at the weekend gap. Okay, first of all, one thing that you need to know is that although brokers close work on Fridays, the Forex market is an autonomous market. It keeps working um, on Saturday as well as on Sunday because currencies are obviously still being used. Okay, so first of all, the weekend gap is a great opportunity to make some money, to cash in on some money. Sometimes the gap is huge owing to economic activity that actually happens during the weekend. For example, this year we had the French elections happening during the weekend. We also had a lot of high impact news happening during the weekend, resulting in huge gaps in the market. 300 pip gaps in some instances, 200 plus pip gaps in other instances. Okay, and sometimes it is possible to have um, a gap owing to a natural disaster. Earthquake happens in China or Japan, and the yen falls dismally, and you know. But one word that I would have my fellow traders know is that even if a natural disaster occurs or a catastrophe occurs, there are limits to which a currency can fall or grow, and these are largely dependent on support and resistance. Strong areas of support and resistance. You might find that um, the price will fall, but to a particular resistance, because having a currency go through uh, a complete free fall is unrealistic. Okay, so having said that, usually the weekend gap that most day traders trade is usually something that is about 20-25 pips. Anything less than 10 pips or between 10 and maybe 15 pips is very risky to trade. This is because every time the market moves over one day onto the next day, the spread is usually widened. Okay, for those that don't know what spread is the difference between the bid price and the ask price. The spread is manipulated or controlled by the broker, and usually the broker will increase the spread so that he doesn't make unnecessary losses. Okay, just back on the weekend gap again. Example of the French elections. I actually had a position opened the Friday before the French elections, a couple of pending orders. But when the market opened on the Sunday evening, um, my orders were executed above the market price, like 20, 30 pips above the market price. Why? Okay. They usually call this slippage. Okay, but that's usually, I mean, these are just big terms to explain one simple term, which any student of economics would agree with any day. The concept of no arbitrage. Okay, arbitrage is the ability or the opportunity to make money out of nothing. Okay, now your broker is not going to allow you to make money out of nothing. So that's why most brokers don't go live immediately at 0000 hours, GMT, whatever, or you Eastern Standard Time, whatever time that would be in New York when markets open. They usually have a minute or so delay. This is because the volumes um, of orders are quite large, and the broker has to manage his risk. If every trader trades in the same direction, surely the broker will go broke. Yeah, the broker will go broke. So he's not going to have that, and that's called arbitrage when you make money out of nothing. So if you place a pending order on Friday and the market actually moves 300 pips in your favor, chances are your favor your order will be executed only 300 pips plus beyond the opening of the market. In other words, you're actually going to open in the negative and not in the positive. And you can spend months and months and months and months trying to fight for your money. You're just not going to get it. Okay, so I hope that was informative for you. We're going to look at a couple of gaps today, the 31st of July 2017. I'm going to look at the GBP USD right now. When the market opened, and I had the privilege of actually watching this, when the market opened, it actually had a gap of about 12 pips. So if I take my crosshair right there and I place where the market closed on Friday, and I pull down all the way up to here where the market opened, you can see that's 12.3 pips. However, the spread that this pair had when the market opened was well above 6 pips, and getting into an immediate buy in that position is quite risky. I'd rather stay out and let people who actually have a gambler's mentality to jump in. But if that gap was something like 30 pips and have a spread of 6 pips, it's a fair entry. I'd enter into a buy immediately. Okay. Also, depending on where the gap occurred, and what am I expecting? What likely is the movement of the pay going to be? Okay. Now, most people will be asking, so how do I know which pay is going to have a gap? The best thing to do is to look for a website called xe.com. There are a couple of other websites that actually do get you checking what the gap is going to be on a couple of pairs. Okay. My last piece of advice on trading the gap for you is two things actually. First thing is, if a gap is greater than 100 pips, don't expect it to close on the same day or even on the same week. It might actually take weeks to close 100 pip gap. So it might actually be safer to trade against the gap and not in favor of having the gap closing. Okay. Now, the probably the last thing I want to say is, when you're looking for weekend gaps, maybe you want to look at pairs that actually are live on the 2 hours before the Asian session. So you're talking about New Zealand, the OD pairs, but also the major pairs have um, stronger chances of having the gap close um, uh, on the or when it gets when there is actually a weekend gap. I hope that was informative, and I hope you learned something on how to go about a weekend gap. Thank you for tuning in to this tutorial. Ciao.